Everyone, really happy to be here at the Avalanche Summit in Barcelona. So I'm hosting this live with the Arts. So the Arts, the French community we created a year and a half ago. We gather builders in the blockchain Web3 ecosystem in France. We have a Discord channel and we host 1 or 2 live streams a week. The goal is really to strengthen human links between people and to do and to travel this whole entrepreneurship journey all together and to grow from knowledge perspective as well as a human perspective. So happy to receive you on the art Jahed today. So you launched Cerulean Ventures, but maybe before, happy to know more about yourself. So what did you do before that?
Sure.
What's your background?
So I got into crypto probably about 7 years ago. I originally was kind of looking at coming at this from the shared ownership angle. So I was very much interested in how we distribute ownership of ventures, how we get more people involved, how we get governance, how we get more people involved in governance. Because when you look at kind of the structures of the regular, corporation, it's a very small group of people who get to basically get most of the wealth and most of the voting rights and everything, right? So I came to it from that angle. I looked at early protocols like Aragon and Gnosis. I still do work with Gnosis a bit. I'm one of the stewards for the Gnosis protocol for Zodiac. But on the side, I had also founded my own startup. It was a startup focused on machine learning for DevOps, basically. And so this is this is 2018. So I went through this journey that probably some of you are considering or are already on. Founded this company through 500 startups from top US incubators. And we ended up selling that company in 2021, December 2021. And around that time, actually a year or two before that, I was still involved in crypto. I had been looking at stuff like Regen Network, had been looking at the Cosmos ecosystem. And so for me, the values of the Cosmos ecosystem really made me think I got to start something here. And then I met the Regen people. They were considering starting an ecosystem fund. And I found my partner who was an early investor in Regen. We really built a thesis and built this fund out to focus on a lot of things in that space. Regen were one of our early sort of participants as LPs. And now we're really focused on, as a fund, that's kind of the path that I took into looking at shared ownership, looking at Cosmos and the app chain thesis and all that, and kind of bringing it all together around this nature data natural asset economy.
Okay, so maybe the governance brought you to the blockchain and crypto ecosystem.
Very much.
And why were you interested in the beginning to Cosmos? Why
Cosmos? It's funny. Well, why Cosmos? I think mostly because Cosmos has, excuse me, it's spring in Barcelona. There's a lot of I've been out of sorts. Clement has seen me. I'm sneezing everywhere. But why Cosmos? I think if you've spoken to Tim Buckman, who's the founder, one of the founders of Cosmos, he speaks to the necessity of sovereignty in money, the necessity of interoperability, the necessity of cooperativity, and some of these values have been actually designed into the software of Cosmos. So what I really liked about it was the flexibility for developers and founders, right? So you can come in and say, hey, I have an idea for an app or a decentralized app, a chain, whatever, and you can have the flexibility of deciding I can rent security from Cosmos, I can actually raise money and come to Cosmos with my validator set. That's where a lot of the venture you raise is going to go to your hires, to your marketing, and to your validators, right? And so I looked at that. Really, it gives developers a lot of flexibility in its design patterns as well. And so now you look at this ecosystem, and it's an $11 billion ecosystem. When I came to it, it was nothing like this. And so even going through the bottom of the bear market, it's still sitting there, hitting something like $1 billion in inter-blockchain transfers per month, 11 billion in market cap. So for me, that's a very attractive ecosystem, right? Because you can come into it and say, I don't want to build on top of Ethereum or another layer 2 or what have you. I have a very specific use case, and you can build an app chain that has its assumptions around transaction volume, around identity, around security, really tailored specifically to what is the actual use case you're trying to address with your app, right? It doesn't have to really worry about the underlying security assumptions of Ethereum, the transaction volumes, the traffic, all that. That's That's not to say it's better, right? It's just a different focus, right? If you actually want to then, and maybe you're building in Cosmos and you actually want to say, actually, I would like to access the user's liquidity and more robust security of Ethereum, you can do that too, right? It's just really about what you want, right? So that's why I like.
And
Excuse me.
no result. So, but also, do you think this is the best option for every blockchain? Because depending on your use cases, might not be useful because tailor-made, and it's also a lot of like resources you need to put. So, which business models or verticals are more appropriate?
No, that's a good
for-
question. I wouldn't say necessarily that that's a hard question to answer because I think it really startup, you're also mostly exploring your business models, right? A lot of a startup is basically saying, here's a landscape, a territory, an ecology of a potential business. And what you're really doing is you're as fast as possible while you still have cash, figuring out what is that search space? Where is the path to a sustainable business, right? And so it's kind of hard to necessarily say that, but I think that it, in general, what has really been proven out on Ethereum is like, look, DeFi summer, we're still summering in DeFi, right? Still have, numbers around decentralized finance. It's been like the most robust thing in blockchain. It still has users. You're looking at even in DeFi for Cosmos, right? Something like Stride has 33,000 monthly active users in the last 30 days, right? Those are not small numbers for Web3, right? That's actually quite good. And so when I look at that, I think to myself, if you have a DeFi use case, a new one, please a new one, not just another token, another DeFi token. A good place to really consider doing it is on Cosmos, or if you really want to just focus on the liquidity itself, of course you can go to Ethereum. But I think that's one of the really proven ones where you can quickly at least say, if you have raised a bit of money, really say, great, there's a lot of great DeFi primitives popping up in Cosmos. I can access them, I can build something on top, and I can access a ton of monthly active users, right? Like that, I think that's really good. That's a great benefit for trying to figure out whether your business model actually has a sticking point and is actually viable, right? And so I think that's a good one. And then of course, you look in Cosmos, there's so much diversity in what's happening. Like I give you an example, Althea, right, is a decentralized mesh network Wi-Fi system that's already got users spread across the central United States, right? That's a Cosmos app chain, purpose-built for the transaction volume of what you would expect for someone sharing a Wi-Fi network in a local community, right? That's kind of crazy out there when you think about it, right? It's like someone built a blockchain for this, wild. And there's Regen Network, right? Regen Network had the opportunity to say, hey, should we access Ethereum's liquidity and just build an app chain that issues, ecological credits like carbon credits based on our own methodologies? Or should we own the entire sort of stack so we really can say when to issue, when not to, what kind of volumes are good for our marketplace? That kind of consideration really led those folks to say we should launch on Cosmos, right? This was about, I guess, 4 or 5 years ago. But yeah, if you're a founder or a dev and you're thinking about that, like, the diversity of Cosmos is huge. There's all kinds of apps that are, there's really straightforward, hyper reductionist DeFi apps that do one thing really well. And then there's groups that are putting together all kinds of crazy stuff that you never thought could be an app chain. So yeah, I think to come around and answer your question, it really depends on what's more important to you in the near term, right? Like is the uncertainty in the business model really more in the business itself and not on acquiring users, then I'd say, hey, you should jump in and say, give Cosmos a try, right?
So to sum up, the governance, well, the way we can build a tailor-made chain, liquidity, we might think it's not as big as Ethereum. Obviously, it's not as big, but still the liquidity is there, and you can clearly try to set up a new project on it.
And to add on to the liquidity thing, right? The liquidity thing ties into the security thing as well, because the thing with that is that people say, oh, well, why would I build on Cosmos? The security is like so low. It's only a $5 billion chain or whatever. And it's like, well, sure. At the same time, you don't necessarily, the problem with this before interchain security was people were like, oh, I have to bootstrap my own validator set. It's only going to be a $50 million FTV. I need more security than that. Now you can rent security from the hub, right? Like Stride is about to go live with that. And so I think like that's a really important issue for builders to consider now, is to say the interchain, the ICF has heard you, the Cosmos, developer community has heard you. They're working to address that.
So you advise even for first time founders, I would say, or for the beginning of the companies, starting in Cosmos is a good choice.
I still think it's a very viable choice. And I also like we invest in Cosmos. We have a number of Cosmos investments. I also think that Polkadot and Avalanche and other, Avalanche subnets, Polygon supernets, Polkadot, what do they call Polkadot? What's the Polkadot equivalent? I don't remember.
Oh yeah. That's what you mean.
They have their own app chain variants, right? But why I still shield Cosmos so much is that you really have the maximum flexibility in your design choices, right? So.
And what's maybe just to conclude on Cosmos, what should be the gateway to Cosmos? What people should reach out to? Because I think it's an issue with everyone has when they have to start.
Since we're live streaming, you can see my response to Clement's question. There isn't a good one, and that's one of Cosmos's major problems, right? So what I do say, I don't have a playbook for this yet, right? So if you wanted to launch something on Polkadot, you know where to go to. You go to the head of ecosystem there. They tell you what the deal is, the economics and everything, and then you just start that process. And it's a governance thing, and it goes, and that's it. However, with Cosmos, to the best of what I can see from speaking with founders and speaking with other investors and devs as well, is that if you're completely new to the ecosystem, it is a little bit of an insider's club. And hopefully people aren't going to come after me for saying this, but it's kind of the truth, okay? And so you have to spend the time to get ingratiated with some of the names out there, because they can point you in the right direction. It's not that they necessarily control resources. That's not what the ethos of the system is at all about. It's just more about saying, where can you go to learn from some of the mistakes that other people have made, right? And so the standard names pop up here, right? You got your Jack Zampolins, your Zakis, you got your Sunny, you've got Bucky, if you have access to them, but they're pretty accessible. You just get on Twitter or Telegram. If you're a builder, if you're a founder, you can get in there and figure out how to join the communities they contribute to, right? Because that's the other thing, is that everyone's involved in a lot of stuff, right? So like for instance, if you wanted to get in front of some of the folks at Strangelove, they maintain a lot of the Juno software and smart contracts. So the Juno community, even though it's gone through a lot of turmoil, is still pretty vibrant. And so that's the Rust-based Cosmo Wasm smart contract chain, right? And so if you wanted to get started there, you're building something on a smart contract platform, do a little bit of research, see who's doing this stuff, get in those communities. They're there, you can get into them. They're not like, they're open communities. So I think that's really the core of how to get into Cosmos, is you have to find the right community for what you're trying to do, get pointed in the right direction for some of these resources.
Yeah, thank you very much. So if you're also looking, you can maybe directly send a message to Jahed.
Yeah, of course. I'm happy to point you in the right direction. You can find me on Twitter. It's not too hard. I'm sure we can pop all that information.
In the video details. You can also reach out to me, and we also have, we host Nebula summits, Nebula.builders this summer, that is fully focused on Cosmos developers. It's going to be just after RedCC this summer. So maybe about ReFi. Why did you decide to move to ReFi? And then in ReFi, what are the challenges? Because we saw recent history is not really nice, I will say, with ReFi. So how can you change the vision people has and you bring value basically to...
Yeah, definitely. Well, first off, have you ever spoken about ReFi on your stream?
No,
before?
Actually, it's the first time. So
okay, so I think we should probably step back and try to define it first. People are like, what the hell is this? Are you guys? Because the thing in America is that when you say ReFi, people think you're talking about refinancing houses. Yeah. So people are like, what are you talking about ReFi? But so ReFi, DeFi had its moment and still its moment, in my opinion. It's pretty great. Like, it's a great innovation. What a lot of people kind of wanted to start doing in crypto, and you actually see this from, even people like Bucky and Cosmos, like they're trying to take some of the DeFi primitives that have been built and turn them towards positive causes. I don't really like to frame it that way because it means that the opposite is that DeFi is negative, which I don't believe, actually, right? I actually think DeFi is fantastic. But it's really kind of saying, like, how do we turn it towards more social good or towards environmental outcomes, or even just infrastructure, fundamental infrastructural concerns, right? And so I'll define that a bit more too as well, right? But the refi shortening stands for regenerative finance. So regenerative finance is a term that's been around for more than 25 years. Actually, it predates crypto by quite a bit. And the whole notion of it was basically to say, we live in a mostly extractive financial system that can only value things by what someone is willing to pay for them in the market, which actually is, pretty amazing and good in a lot of ways. And then there's other ways where things are created called externalities to the market, right? So, like, if I'm going to get some coal out of a mountain and I blow up the mountain, an externality created is that biodiversity loss, right? No one pays for that. Watershed health, no one pays for that. Carbon potentially sequestered by trees on the mountain, no one pays for that either. If you have the rights to the mountain, it's yours to do whatever. You go through the right channels, you get the mineral rights, you're all good. So part of what we're trying to do with refi is to say, can we actually get a market price for ecosystem services, right? Because when you actually back up and you look at what does nature provide the economy every year, just on a yearly basis, by the way. Do you know this number, by the way? So the worldwide GDP is about 100 trillion, right? And the input from nature to the economy, based on economists' estimates, is about anywhere from 16 to 54 trillion dollars. So that's just inputs, raw inputs, right? It's what we get from clean air, clean water, trees, soil carbon, all these things, right? So there's a number of, if any scientists are actually interested in this, I can drop the papers to come in here if you're interested in seeing the numbers. But so for us, it's interesting as a fund because we were like, well, people are talking about carbon credits and all this other shit, and that's fine. But we're really interested in seeing, like, what is the value of nature to the economy. So what we think about as a thesis for the fund is we are supporting founders and developers who are building the API for nature, right? Like, how do you actually have a way for machines and markets to understand the value of nature so that we who make decisions with these things can actually say, oh, this tract of land that we're looking at, that we're about to blow up, the value to the economy from the carbon sequestered, from the biodiversity, from that trickles down to, say, fisheries and things like that we depend on, is this number, and the market for copper or the market for timber is this number. Can we make a rational decision between this, right? Today, I'd say we don't do that calculation. And so that's really, for us as a fund, what refi is about. We're trying to say, how can we actually find a financial price for nature so that we can protect, conserve, or use it in a more intelligent way, right? And some people are like, oh, it sounds like you're going to financialize nature. And I'm like, my answer to that is always, we already are, right? Like, we're sitting on, we're sitting on these pallets made of wood and like these textiles and what have you, right? So in many ways, we already have said that timber is worth X price. So getting back to the original question, our thesis is mostly that the regular old financial system mostly values things by what can be extracted and turned into products. That's totally fine. We depend on all these things. We would also like to price in what is not the price of only extraction, right? Like what is the actual other value of these things? And that way you can have hopefully a more coherent economy.
Yeah, that's great. So if anyone wants to work in a refi or wants to know more about refi, any resources, website, media you can advise?
Absolutely. I actually still think the best place to go is Twitter, because all of the builders are on Twitter and all of the interesting projects are. But I'd say that's a good place to get introduced. I think if you want to build in the space, it's the most. I'd give you the same advice I'd give myself when I started my company years ago, is find a problem that you really, really like in this space, right? So like I can point out some of those, right? When you look at the normal financial system, and actually this was a little bit about what my panel was about yesterday. When we were talking about scaling climate finance, um, when you talk about conserving nature and all these things, most of them happen today through the provenance of NGOs or state-based projects. And they're really kind of just charities, sort of. It's like charitable work. So what would be interesting is to actually say, well, I am a family office, or I am a foundation, or a government that wants to put a ton of money into this. There's no real place for risk capital to be deployed in nature finance because there's a number of missing primitives, right? What I'm talking about, I'm going to talk about DeFi a little bit, right? So we're in 2023. There's like, I don't know, 5, 6, 7 different platforms cross chain that you can go and find basically, derivatives offerings, options, futures, any sort of, derivative risk bearing instrument, right? That has been built up with automatic settlement and all the cross chain, really sophisticated stuff. Now, if you go into the regular old economy around, say, compliance-based or voluntary-based carbon credits, if you wanted to deploy a shit ton of capital to say, $1 billion towards something, it's impossible because there isn't an instrument to do it. There isn't an underlying asset that has liquidity to do it. But I mean, look around you. I just said there's 16 to 54 trillion dollars of the stuff that goes into the economy, right? So it'd be really interesting if you think about this as a builder and say, now I know this DeFi stuff works. How do I turn this into an option where I could securitize a forest, or I could securitize the watershed's health or something, and then, or renewable energy, and I can have these renewable energy options and futures, pour a ton of money into this, and we could use the percentage of that money to finance this stuff, right? That we think is a really interesting problem. So I think that you can get ingratiated in the refi community, and everyone thinks it's carbon credits, carbon this, carbon that. There's a lot more to it. But then you can start to meet like scientists and other people who are actually like, we're working on some real problems. We don't know how to solve them. And then you could be, if you're a person who knows Solidity, or who knows Rust, or who knows the Cosmos SDK, and you find a person there who's like, I want to do this, that's a great place to start, right?
Yeah, maybe do you want to? We all know Bitcoin because I think we all started by trying to understand what the Bitcoin consensus, how it does it work, and we had, I think, a year ago all this talk from the move to Ethereum, proof of work to proof of stake, and then Bitcoin was like a highly polluting blockchain. So
Yes.
do you want to talk ways to mitigate maybe this proof of work consumption?
This is one of my favorite things to talk about because I am like a somewhat closeted Bitcoin maxi personally. And people are like, well, you're the guy who's like invested in environmental data and environmental asset outcomes and all this kind of shit. What do you mean? So if you look at proof of work as just its direct climate impact, it's like the layer zero understanding of what Bitcoin does, right? When you look a little deeper, you see that roughly 52% of Bitcoin's energy consumption comes from renewable energy. And the interesting part about Bitcoin is that with the way that it interacts with grid energy, it serves as a really strong incentive to drive microgrid adoption and to also drive the adoption of distributed computing, right? So I'll get into that. It's a thing to remember. We'll put that to the side. And so proof of work, okay, uses a lot of energy. The other thing is, though, that if you're looking at that energy consumption, the other 40% might be brown, dirty energy, whatever, what have you. However, now there's a number of companies, so I'll name a couple of them. SPN Energy is one of them. Crusoe in the United States is another of them. Power Blocks here in Barcelona is another one of them. And what they're doing is working on specifically using methane mitigation to power renewable energy for Bitcoin mining. Now, why is this important? Methane is something, by estimates, it's something like 30 to 80 times more warming in its potential than carbon dioxide. So getting the most methane we can out of the atmosphere now is actually very, very powerful as a climate mitigation act, right? Where does most methane come from? It comes from pork farms. It comes from, so that's biogas. I'll call that just that's the biogas category. Pork farms, beef farms, all this kind of stuff. Landfills. And so in Europe and in the United States, you have these regulations around methane capture where you have to flare methane, which means burning it, right? And so that energy is basically lost and the carbon is not captured. There's already methodologies to issue credits, right? So that you can go back to a site owner, like a landfill site owner, and say, hey, all this stuff that you flared or captured, I can give you money for that if you continue to not just burn it, right? So a lot of these enterprising Bitcoin folks were like, well, we could move a miner on site. We could capture all of the methane. We can convert that methane to carbon dioxide energy by flaring it, but then we can also capture the carbon dioxide. And so what that ends up doing is you now have a place of stranded energy use, right? Bitcoin is not competing for any other energy here. It's actually going towards something that's stranded and not being used. And it's also, secondly, it's using energy, or it's capturing methane, which is a super, super, polluting gas. So I look at this, and there's another third trend, right? For us here in crypto, from my perspective, we want enterprises, we want institutions, we want big, foundations, endowments to hold Bitcoin, because it's actually an asset that I'm going to repeat the inflationary, hedge thing, because I think that's been mostly disproven. But there are a lot of them who want to hold this stuff, but they don't do it because of the ESG implications, right? So there are other, now if we think about Bitcoin, if you're going out there and you're one of these people like Vespine or Crusoe, and you're turning this into, turning the stranded energy asset into compute, that would be really nice if you could also say, by doing this, I've mined this much Bitcoin, and, BlackRock, not Credit Suisse, UBS, right? Someone else, right? You can actually hold this Bitcoin. You can have positions against it. You can hedge whatever you want, but you can hold it. And at the same time, we have proof of green energy production used to mint this, right? And so that ends up becoming a very interesting prospect, because now you can have a bunch of people pour money into sustainable Bitcoin mining that drives the usage of renewable energy, methane mitigation, and connecting this really far gone places to the grid energy. So you can look at a local community and say, we use Bitcoin mining to drive the adoption of connecting this community to the grid because it's profitable, right? Which to me is a pretty interesting thing, because what happens in the global north is not at all what happens in the global south with renewable energy. Basically, if we live in the global north, the way that our grid developed was not profitable. It was a public infrastructure project. So when we look to the global south as investors, and I'm talking not us, not VCs, like big, foundations, endowments, institutional investors, these guys all want to return, but that's just not how public grid energy developed. It was a public good. And now I think we found a little hack with Bitcoin where we might be able to actually get Bitcoin as a public good that drives distributed energy and grid energy for a lot of people. So that's kind of my refi Bitcoin case, actually.
Anyways, people can follow this Bitcoin case? Or
Oh, absolutely. I mean, I can name a couple. Yeah, I named Crusoe. I named a bunch of other people. Sustainable Bitcoin Protocol is a company that basically does exactly what I said, right? They go and on site, they monitor the production of Bitcoin and they monitor the energy use. And then they issue a certificate, a proof of basically green mining, right? And then that certificate can be bought or owned by an institution, a person, someone. If you own Bitcoin and you care about this, you can own an SBC. And by holding an equivalent amount of SBC, you are basically saying, I have, roughly proof that my Bitcoin is mined in a renewable energy or methane mitigated way. And there's a number of of some people to follow. Daniel Batten, he runs a group called CH4 Capital, and he puts out really well-researched, one-sided evidence and research on the energy use of Bitcoin and how it interacts with renewable energy, how it interacts with the global poor, all kinds of really interesting things. So Daniel Batten is definitely a good one to follow, and Troy Cross as well, who publishes a lot on basically using Bitcoin as an incentive to drive this renewable energy transition.
No worries, all the links will be on the video because all the names and the
definitely. I'm slowing down a little bit as I also remember this is a French thing, so I will also speak more slowly.
Well, we saw the fact is it's difficult to. I wanted it to be really in French because in France we're extremely bad. I'm sorry for all my French fellows, but we are. That's a fact. Quite not the best in class in English, and it's also my case to be honest. And so yeah, it's better to start on links and to make connections. But as soon as we also need to go outside to meet new people to discover the world basically, and this is what we do with the Arch, and so we have to switch in English at some point. Maybe another topic, maybe the last one, if anything else you would like to add, or if any questions from the chat. How do you invest in startups? What are you looking at? Many of the viewers, many of the Arch members are actually funders, and it's difficult when you're a coder or you're working in marketing, and at some point in time you need to raise funds, so you don't know what to expect, what VC funds are looking at, and it's not really transparent the way VCs are elaborating their memo there. And so
absolutely.
I think we are all happy to listen to you about.
Oh, for sure. So I think the first thing is I am actually pretty transparent about what I invest in. So I think step one is not for me, I'm just saying in general, is you really need to do some research and not just scrape a bunch of LinkedIns and Twitters and start spamming people with your deck, because most of the time, like I'll give you a little bit of a background on how venture works, right? Most of the time, a VC has a limited partner agreement, which is the agreement with all of our investors that actually determines what our fund is about, what it invests in, how it provides returns. And most of the time, some of the time, if you're a generalist VC, there isn't a lot of this. If you're a niche specialist, very specifically focused one like me, it might even say some of the stuff that's or not. And so you need to actually get out there and see who invests in the type of thing that I'm doing, right? Who has a track record of doing this, right? And sometimes you'll find that the thing you're doing is so weird and new that there isn't really anybody. So then you look for the ones who are weird and are interested in weird shit, right? There are a lot of them. I'm actually one of them, right? So you find those people. Now, this is the way to do it because, look, I'll tell you, I get probably, 10 pitches a day when I look across my email, my LinkedIn, my Twitter. So when you put that together, I'm seeing something like 3,650 deals a year. And there's no way that I'm seeing all of them because I'll read the first line and it's like, hey, I'm doing this NFT thing, delete, right? Because like, I don't do it. It's very obvious. You go to my website, you go to Cerulean's website. We're investing in founders who are building the API for nature to facilitate the green energy transition, some with open source software. So when you come to me with like, hey, I've got this fractional ownership NFT platform, I've got this new, amazing DeFi platform for this, that, and the other, I'm like, I can't invest in this, man, right? And so at this point, I actually can't even answer you because there's so many of them, right? So my first piece of advice is just do a little bit of research and say, who's interested in this thing that I'm doing? Who has a proven track record in investing in it? And if there's nobody, who's the sort of weird, unorthodox thinker who might give it to the time of day, right? I think as a founder, that's like the most important thing. Almost think your other market, right? If you have a market of users, who's my market of investors, right? Segment them, think through them that way. And then what does it look like for us from there? I mean, I'll tell you, man, you're in this too. It's really rough out there.
Yeah, I'm just as an interviewer, but yeah.
Yeah. Like, right now, I was looking at some numbers on this, and there was roughly an 80% drop in Q1 2023 versus Q1 2022 venture deals, right? So I don't remember if it was deal number, amount of deals, or total capital, but I think it was total capital. You're talking about 80% less capital deployed. So what does that mean for founders? It means that you might have to bootstrap more. You might have to actually have users. You might have to have a much more solid plan when you come to VCs. It has to be probably currently the days of raising on a pitch deck and a few and pictures of the team is kind of over, right? So you need to just for early stage. For me, I think you need to demonstrate that you have a market that's growing very fast or is already huge, because that merits venture returns, right? When you look at this from that perspective, from a venture perspective, we really have, if you put yourself in our shoes, we are looking for things where any particular investment is a big enough market that it pays back the whole fund, right? So if you're sitting there with managing a $50 million fund and you're making $500,000 investments, when you do the homework, any one of those should be a 100x, basically, right? And that's how you get to the conviction of this is the deal we're doing, because you believe that these guys that this group, whoever it is, can do this. And so that's really where you have to capture our imagination, because I say imagination because we're making this shit up, man. You're like, here's where I am today. It's my founder. It's this market. It's this thing we want to build. And then you're like, here's where we're trying to go in like 7 to 10 years. It's going to be a huge market. We're going to capture this much of it. It's going to be a huge business. And we have to fill in the blanks between these two things, right? And so that's really how you can think of your pitch deck and the story you're trying to tell. Because if I look, even if it's something I invest in, but I look at it and it's like, this is a $250 million market. If it is, it requires that you capture, almost all of the market. It's not going to happen, right? And that doesn't mean it shouldn't be a business. It just means it's not going to be a venture-backed business. So hopefully that kind of gives you some answers for the founders who are thinking about this.
How do you think also about the attitude founders should have in front of VCs, not to oversell the projects and maybe being focused on numbers, metrics? So you talk about the market metrics. What's the focus and the attitude globally they should have? Because a VC, it's always you need support from the VC. It's a kind of mentoring relationship.
Yeah.
How would you describe also the relationship founders should be looking to when they are looking for a VC? Because it's not only about having capital, it's being able to grow and having actually successful projects.
Absolutely. Well, I think there's two questions in that, right? One is the attitude of coming into it. You come in with a lot of numbers or all that. And then the other one is more around what kind of relationship are you looking for as an investor, and really kind of how do you tie that all together? I'd say for the first one, it's really dependent on who you're courting, and what this means is, I'm an American living in Europe, and I built an American company and sold it to a UK-based company, right? And so for me, I have a little bit of experience in both worlds. When you are talking to, here's the easiest way for me is, if you're talking to a European pre-seed investor and they start asking you questions about revenue projections or financial metrics, you should stop talking to them for the most part, because they don't know what stage they're looking at, right? They're treating you as a seed or even Series A investment. And that's how you know that you're typically not going to meet those metrics, and it's not going to be a successful investment. I see this a lot in Europe, actually, right? So there are good European pre-seed investors. It doesn't mean they don't exist. I just see this a lot. So when you're having those early conversations, it's important to come in and say, look, we have a product, or maybe we do have a product and it's in beta, or we have this many users, right? Or we have none, and here's our plan for go-to-market. And remember, the plan is not some really super concrete, well thought out thing. It's 5 or 6 well thought out things, right? Because this is all a hypothesis at this stage. So I think you have to come in with that sort of hypothesis mindset and say, here I don't know how I'm going to get this giant market, but I've convinced you that it exists. I've convinced you that I'm the team that's going to go after it. And here are my 5, 6, 10 top things, my tactics, strategies, where I'm going to do it. And then if you show that you actually are willing to learn, but you're fucking relentless, that's really like what people are looking for, right? Because I'll tell you, when I see European or American or West, we have a couple of investments in Africa, in the African continent as well. When we see some of these teams, what really caught us is their willingness to learn, but also their resolve. It's kind of weird, right? Like you have to actually be both a little bullheaded, and you have to be like, we're doing this, but you also have to be willing to change and be like, we fucked up. We got to try something new. How quickly you do that really determines a lot of your success. And that's, it's not great advice. It's hard to internalize, but that's kind of what we're looking for, right? A lot of the time at this stage, it's really about you as a person, more so than it is about the business and where it's at.
To be honest, it's kind of perfect conclusion, because it's exactly what I was trying to ask. Like, what's the most important thing specifically in the early stage?
Yeah.
Do you want to conclude with like specific opening remark, like?
Oh yeah, for sure. I think so if any of this refi stuff or all that was interesting to you, you can follow me at Against Utopia, which I'm sure Clement will put in the links. Cerulean.vc is our website. We're a $30 million fund, and we're actively investing in founders who are building at this intersection of climate, nature, tech, and crypto. So if that's you, please hit us up.
Thank you very much all for viewing. If you like this content, so I'm really happy to have you today, because it's the first IRL interview I did after a year and a half of like online interviews. So it was really cool.
Nice,
hope you like to have comment questions. Drop on the YouTube comments or on every platform. You can also send like Jim directly on Twitter. It's like 0xclam my Twitter, or on the Arch, join the Arch Twitter. And any questions you may have, if you like the content, happy also to have like a like and a comment. It's good, and try to improve and to also invite different hosts and on different topics. So if you want to hear about different topics, also feel free to ask what you want to see and who you want to hear. Have a good day, guys. Bye.